Greetings traders, this is Houston Trong from thetradingedge.org, and here is the market outlook for March the 29th to April the 2nd, 2021. Now, we have 3 days left in the trading month of March, and then we get to a brand new month and brand new trading quarter in April. So this coming week should be an interesting one, as you know, with the month closing and the quarter closing. I wouldn't be surprised to see some traders sort of closing up positions and squaring things off to end, this quarter, to end this trading month, and then the brand new month on Thursday, this April the 1st, again, could potentially be volatile as traders sort of jockey around once again to get into positions. So this week is a shortened holiday week, however. So Friday is off in North America for a Good Friday. So we do have a shortened holiday week. We got that, first day of the month and quarter on April the 1st, which is a Thursday. So should be an interesting trading week. This past week trading was actually quite interesting as well. There wasn't much econ news. Was there any real macro news to change the narrative or change the sentiment of the markets? But this left the market to trade mostly on technical factors and just your typical supply and demand imbalances. So there was definitely some interesting trading this past week, and to be honest, it was a tricky one. If you were looking at the markets intra-week, it was a tricky one. So let's get to the charts now. We'll talk about the week that was, what to look up for this first week of April, and then where we go from here. So let's jump over to our usual first chart, and that's the VIX chart. So if you've been watching these videos for a long time, you know that I like to first take a big step back, look at the bigger picture, so we have the proper bias. So we have the right trend in place, that we're making sure that we're on the right side of price. And so even though we know that we're going into the lows of VIX and that we're heading to a very lower volatility environment, there's always that possibility, right, that as you head in the lows, you might get a snapback kind of rally. This also applies to things that are going into highs. Anytime you go into highs, you might get that snap back pullback, which can stop out a lot of people. And this is what I've sort of been watching for now in the VIX for the past few weeks, as we've gotten into these fresh lows, that possibility, that snapback. I've been saying the month of March it's quite unlikely we're going to get a big snapback, because we're likely now only 3 days left, that we're probably going to end the month red on the VIX, and probably will end the month red on the green on the SPY. And that doesn't look like it's going to change now, right? Look, here's the month of March, big red candle on the downside, minus 26% a week for the VXX, and more than likely, unless something happens, we get that snapback like I've been saying, they're going to have to reverse split this thing, because this thing will go to zero, right? So this chart will eventually go to zero if they don't reverse split it. So they will reverse split it if it keeps going down. Now, we do have a lower low, as I said already. So this is the situation now. You do have to watch out in the month of April for a snapback rally that can then stop out a lot of people, because the downside now, if you're selling into these bottoms, you're selling in the lows. And what we know about broad informations, if you've been watching these videos, is that these things can quickly go from end to end very quickly when you get exhaustion. And so we always want to watch out when we're buying in the highs and when you're selling in the lows, because at that point, you're pretty much the last one in that trade if you're just starting the positions now, right? So be careful of that as we enter into the month of April. So for the most part, though, VIX heading to the downside. And as I was alluding to earlier, even though we know the VIX is going to the lows, and that this month will probably end red. So again, we do have 3 trading days left. Anything's possible, but I think it's going to be very hard for the VIX to go plus 30%, let's say, and get back above here and stay above here with 3 days of trading left. Anything's possible, as I said already, but the probabilities are probably quite low that's going to happen. So that being said, even though we know that it's going to lows and it's probably going to close probably red on the month, the intra-bar volatility makes it interesting, right? So during the week here, so let's talk about the weekly chart on the VIX now. At one point during the week, we popped up and it looked like we were going to challenge last week's high. It can't come up into last week's kind of the mid-range of last week's the prior week's range, and then look like we're going to come out the other side. However, after the week was closed and all said and done, you can see once again that we had another down week. So 3 consecutive lower lows on the weekly chart, and we actually have again this continuation of this outside, inside, and down, down, down. So just continuation right now, going into the monthly lows. So I did mention that we did have to watch out because we do have that Bollinger Band right there. So it was going into the Bollinger Bands, and that was the concern, was that if we were going to break below there and not stay below, it could pop up again and take out the prior week's high. There was that chance of it happening, but look, that red line here, that ended up acting as resistance. So look, pretty much right to the T. So that red line is 13.15, right? This week's high was 13.30. So we tested that level and came back in. What was that red line? What was it? It is literally that 3-month chart. So if I go back to our higher time frame chart here, and I type in the 3-month chart, look, that red line, the 13.15 area, was the prior low. So as markets often do, they break below it and they retest that level. So that 13.15 area was the breakdown area. It came back in, retested, and if you had too tight of a stop in your short VIX, it came in, stopped you out before continuing back to the downside. So it made the trading a little tricky, as it always does. The markets are not here to fulfill people's all their desires and to make it easy on you. They tested the metal of those traders who were short that trade. So on Monday, gap down, looked like everything was well, and then on Tuesday, Wednesday, Thursday, they begin to squeeze anyone who got short, right? So if people got short down here this past week, if you bought down sold down here, you're thinking, okay, this is a breakdown, it's going to keep running. You got squeezed here for 3 days until Thursday, and then markets began, the VIX, began to do what it does best, and that is to basically decay, basically melt. So it went inside bar up, right? So it went inside bar up to start the Thursday. And then the Thursday, this is what's interesting to watch, this is where we got the red dog reversal. So that gap reversal where it gaps up slightly and then it faded back in again. This creates our inside bar reversal short. So once you break below Thursday's low, basically it's a reversal signal and it takes everyone out who got along in the sequence, right? So for VIX buyers right now, it hasn't been very profitable whatsoever to get long VIX, especially in this protracted downtrend here. It's very, very hard to get long this thing. And this is why, even though the markets have been kind of pulling back a bit, as VIX is going in the lows, you have to really be skeptical because we're at this point here now, the VIX is not signaling any kind of fear, any kind of discomfort. For that matter, it's just sinking in the lows, so expect this thing to probably head even lower. However, the first day of the month, April, and going into next week, we definitely want to be watching when we get this new quarter, this new quarter, on which side of that quarterly open are we transacting. Right, so we've talked about it many times. Here is this blue line. That is the quarterly open. I'm always watching that level very, very intently because that is going to be a significant level. If you haven't been watching these videos, again, go back, reacclimatize yourself or familiarize yourself with these concepts. But you can see how important these opening levels are. The ones that I watch, once again, are the weekly, monthly, and quarterly, and these are very significant levels. Look at this blue line. How many times did that VIX tag that blue line, and how often did it hold up as resistance? Look, we had over half a dozen attempts here this past quarter alone where it tried to break above it, but it held below. Of course, we also have that 1630 area, that's yellow zone, which is also what I'm watching to see if it can hold down VIX. So this continues to hold. However, on Thursday, we're going to have this blue line appear somewhere in this vicinity, right, wherever we are on Thursday. So at that point, you want to be seeing which side of that line price begins to transact. Once again, this yellow line, or this orange line will also be down here because that's the monthly open. So this orange and the blue line will be somewhere around here this coming week, wherever it opens up on Thursday. And then what side of price will this thing trade? Will it be above these orange and blue lines, or will it be below? Right, so that's what we want to watch for in this first trading week of April, because it's done. So long as you're staying on that side, you're on the right side of the trend. For now, we're well below those two levels, and it's just been melting ever since. So VIX, for the most part, the most significant thing was this reversal on Thursday. Things were looking like things could reverse earlier in the week, Tuesday, Wednesday, and Thursday. But once price came back in, it came back into the prior bar's high, reversal, and then you had the confirmation, inside bar, reversal short to the downside, and that's basically a continuation move to the downside for the VIX. Thursday was a very significant reversal day for the markets. Now I track, let's go to the SPY now. So on the SPY, maybe before I jump into the SPY, is there anything we need to look for? Yeah, so for this coming week, here's what I'm watching just very quickly here on the 2-day chart. outside bar now on the VXX. So this coming week, which side of this bar do we trade? Do we go Momo up? So if it goes outside bar up, that's called Momo up in my parlance. It goes outside bar down, that's Momo down. Or do we kind of dance around in here to close out the month of March? So just very quickly, I'll go back to this weekly chart now. Just redraw our ranges. Now we have our ranges drawn in there now, the purple lines on the highs and lows of this past week's trading. Now, if we keep breaking down to the downside, that begins a Bollinger Band walk to the downside, right? If it pops back up, then you have to watch out, especially later on the week once we have that new time frame on the month and the quarterly. We got to see how we trade in relation to that level I talked about already, and then the weekly levels. If we can break above this week's high on Thursday, watch out, right? Because you're gonna have full time frame alignment to the upside. That could cause some short covering on the VIX here. Higher, so watch out for that. That's what I'll be looking for the VIX. On the SPY, it was definitely on the indices tricky trading. There's no question about it. For the most part, for most of the week, it was probably more profitable to be short biased, as it was kind of melting in. But at the same time, it was hard to be too short. The SPY, anyways. Obviously some individual stock names that were selling off quite aggressively throughout the week. But the SPY itself, was hard to be short this thing because it was just kind of slowly bleeding lower. But on the higher time frame charts, let's begin there, and then we'll work our way to the higher time frames, or lower time frames, excuse me. It looks like, for the month of March, we're gonna end up green. So unless something happens here, the 3 days left, it's probably gonna be a green month here, which I've been talking about now for the past couple weeks. We've had 5 consecutive higher highs on the monthly chart. 1, 2, 3, 4, 5. This month now looking like we're probably gonna close green. Quarterly open got tested, or a couple weeks ago. We held once again, and we're still off the races to the upside. So on the weekly chart, we did break below the prior week's low, but look how they repaired that chart. So at one point during the week, right, this thing was trading below the prior week's low. That caused the reversal on the weekly chart. However, you do have that monthly open right there, which they tested, and it held, and that means traders once again are not letting this month go red. They're keeping this month green, and the challenge is, can they somehow turn this month red to make it stay red on the monthly chart? I'm thinking it's going to be a very tall order. So for now, we'll redraw our ranges. Look how strong we closed on Friday, near the highs of the week. If we break above this week's highs, it's a reversal back to the upside. No reason to believe, once again, we might not get those all-time highs I've been asking for, or kind of suggesting we might get this coming week to close out the month of March. So here's the daily chart and the trading that we had this week, and it was kind of tricky because even though you have that higher time frame bias, right? You got the monthly green, you got the quarterly green. It was melting for the most part for most of the week. Now this Monday, we did have this strong move up on Monday, up 0.8%. Again, relative upon what strong means, but we did get that reversal, right? So I was asking, I was pointing out last week that we have this Momo down situation. We break above this high, it's possible we go right back once again. However, that wasn't in the works. It wasn't meant to be, and the sellers came back in and they took it back down, stopping out everyone who was going to try to call that the bottom. So they come back in, and look, they test right there. On Thursday, they test the monthly open, as I mentioned already, and look, that purple line, they tested the 50-day EMEA. That thing held, so they tested it, bounced back up, and Friday was basically a rush to the upside. On Thursday, this was significant. We had a gap down, and this is what you really want to be watching for. Now, the gap downs, I've pointed this out many times now, right? So this reversal signal, this gap reversal or red dog reversal signals is quite useful to watch, especially when it works on weakness. So when you have 2 or 3 days of selling and you get a gap down, the sellers have to keep it down, because at this point here, they're getting everything they want, but now you're hitting some important levels to watch. If the buyers can somehow step up and defend that, and they get back into the prior bars range, there's a possibility we go back out the other side. Now this so happens that they closed very, very strong on Thursday, and this particular day I was watching my watch list of stocks that I track. I have a watch list that I track of about 480 stocks or so. And that day, that single day, so that Thursday, the 25th of March, we had 100. I think I'm looking at my notes here. We had on my list anyways. I had 136 stocks out of 477 that did that gap reversal, that did that red dog reversal. So about 28% of all the stocks on that watch list alone created reversals that day. So going into Friday, there was no question, but to be biased to the upside on Friday. Friday, even though we closed very strong, it was a pretty muted day until perhaps the last trading hour. I looked like it was going to be a very, very quiet day, a smaller than a normal trading range on Friday. But then, of course, some news came out about perhaps a fund getting blown out of the water, and that caused that fund to have to basically cover all their longs. Look like a pretty massive blow up actually, and we'll show some of those names in a few moments here. But then at the end of Friday, we had a bunch of maybe algos buying the markets as well as momentum chasers buying in, and that caused the markets to basically create this great move here to end the trading week. So look at this. So this basically on Thursday, this is the reversal day, and they just basically run out of time. Had they had more time, this bar could have taken out that bar in one single session. However, it runs out of time, and it does it on the Friday. So this here, if you don't recognize it, this is actually a broadening formation. This higher is higher than that high. That low is lower than that low. So how does it look? Well, on a 2-day chart, it looks like this. It creates the outside bar, right? Because you get a higher high and you get a lower low. That creates the outside bar, and that's tricky trading because it gets a lot of folks offside. So you're getting lower lows, you're getting higher highs, and that means people are getting trapped. They're getting chopped back and forth as people go short, then they maybe go long, and they go short again, and then eventually goes back up again, and that causes a lot of choppiness for the week. So not easy trading, especially if you're trading inside this range. Kind of tricky actually. But the bias is the upside. That's what I've continued to say. If your bias is the upside, even though you might take some shorts on other equity names on the SPY itself, your best course of action is to be looking for areas to be buying as opposed to trying to be shorting into lows. So that was the way things played out on the SPY this past week. So going back to some of those names that got hit really hard and then bounced. Take a look at something like Viacom. So this fund, that was perhaps responsible for some of the carnage on the past week. So they're very, very long and invested in some of these names like Viacom, names like Baidu and Disca. These things have been beaten up over the past week. So this is forced liquidation. This is what a forced liquidation looks like. So going into this past week, it looks pretty nice, right? This is the problem. Anytime you go into highs like this, when the trend is smooth like that, it doesn't take much to stop someone out, right? Especially if you're riding this one like, this is a beautiful trend. It's going to go on forever. Look at that run of Viacom. From approximately, look at this move. It was trading at 29, got up to 100, and here, things are great, right? Like this looks like a beautiful smooth chart. What happens? That happens. So look on the weekly chart. This is what that looks like on the weekly. This is why you always have to watch out when you're going into highs. Look, Bollinger Band walk for multiple weeks. Starts right here, right there actually. We get a multi-week Bollinger Band walk move. As you're watching this, you always have to be concerned of this type of move, and as soon as you break below that low, it's game over, right? That Bollinger Band walk gets extinguished, and that's what happens. If you don't put your stop right there, that's the last line in the sand. You do not want to get out anywhere lower, because then you're gonna have a hard time getting out, and then you're gonna wipe all your gains. So you made a bunch of money up here, all right? Let's say you bought up here, you hold too long, and that happens. That basically wipes out 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of trading gone in one single week. That's what it looks like when you have forced liquidations, and it creates, what do you get? The outside bar, right? That's the outside bar. That's my little symbol for it, the red diamond. You get the outside bar in the week, you stop everyone out, and then they get back in again. So at the end of the week, we come off the lows, it tags the 200-day moving average, and it's a forced liquidation. People jump back in again once it starts to pop back up. So you have names like Viacom, you had names like Disca. So this fund was heavily invested in these types of names as well as Chinese ADRs, and you can see the exact same trend and pattern on Disca. Look at that smooth chart. All right, going to Bollinger Band highs, everything is well. Right, where's your stop going to be? Your last line stands that lower low, the prior week's low. Because once that low gets taken out, watch out, and boom, that's what happens. If you see enough charts, you know how to protect yourself from this situation here. Is like that low there is your final line in the sand. This is just like the VIX now, where the VIX is having. I'm not saying it's going to be. It's this parabolic as this stock was, but that's always a risk when you go into Bollinger Band highs or Bollinger Band lows, that you have one reversal candle that can wipe out multiple weeks of gains. So that's what want to be watching out for on the VIX and any kind of chart you're trading that looks similar to this, where they've had a protracted Bollinger Band walk to the upside or the downside. So there's DISCA, and this other fund was also, this same fund was also long some Chinese ADRs, and we know those Chinese ADRs have been beaten up for the past few months, as I've been calling out that EM trade that's been, that has been, how EM has reversed and it's been going down. Baidu got smashed for the past few weeks, and then finally on Friday, with enough forced liquidations, look at the size of the volume on Friday. They finally popped it up, creating that red dog reversal off that 200-day moving average, and the buyers, step up and they buy this thing, maybe get a multi-day bounce here now on DISCA as the damage has been done, the longs have been liquidated, and now you have some folks coming in to kind of sweep up and take and be opportunistic to take advantage of this this kind of overextended condition. So that's what it looks like on these names that got liquidated. Let's keep going here. Let's look at the Qs, and this kind of played out the same across the various indices. Now the Qs is probably, again, Qs and the Russell, the weakest out of the four indices. Dow is actually the strongest of them for the month so far, up approximately 7%. But let's talk about the Qs, then we'll get to the Dow next. So Qs right now, it definitely repaired its chart. So we had that reversal earlier in the month, and the question was it going to stay red? It is staying red. However, it has repaired that damage that was done earlier in the month. At one point during the month, we were trading below the prior month's low. It has now been repaired. We now have a kind of a bullish hammer to close out March. Do we end up this month looking like this bullish hammer? If so, that is, as I said, it's kind of bullish, especially if we can take out this past month's highs in April. Possibly now we go back to the all-time highs again on the Qs. On the weekly chart, we had that possibility of that inside buy reversal short, which I called out last week, and it did trigger, right? But the buyers did step up, they defended, and so if you got short down here, it's it was a decent trade, but now you're at risk. If it breaks above this past week's highs, I would definitely suggest getting out of that trade, because then you have no reason to be in that trade anymore. Especially if you can break above here, it'll come back quickly, take out this week's the prior week's highs. We redraw our ranges now, and a break above this past week's highs will and then next week's highs, the prior week's highs, that will invalidate that signal, and then we may be heading back up and taking out that prior pivot high there. Okay, for the Qs. And on the Qs, we did the exact same thing that we saw on the SPY, however to a lesser degree with less range. But all the indices had that gap reversal, that red dog reversal on Thursday. Qs, there's a reversal on Thursday. Once again, though, it is trading kind of choppy. All right, you're not getting the really big moves because you're kind of trading with mixed time frame conflict. You have a red quarter. Well, it was red until Friday. You have a red month, and then you had mostly a red week until you got that reversal right there. Once you get the reversal on Thursday, where I said once again on my watch list, I had 28% of those names do gap reversals. The bias had to be to the upside on Friday, and Friday worked out slowly, but it closed near the highs on the to end the week. All right. So on SPY, we know what happened. On the Qs, we know what happened. On the 4-hour chart now, on the Qs is what I'm watching for. Can the buyers get more play here? Did the damage that happened on earlier in the week, did it get repaired? Most of it did. We had a Momo down situation here, right? So Momo down, multiple day move down. There's your gap reversal on Thursday morning, inside bar, and that triggers the move on Friday. Inside bar up, although this is an outside bar, so a little tricky on the Qs here, because at some point it did come back below, scares people out, and then proceeded to close higher, but still again red week, but a green red month, but a green week and a green quarter. So that's trading with mixed time frames now. A little tricky with the Qs, not the easiest stuff trading there. Maybe we need to see the month close out before things get smooth again this week here. Pretty tight ranges, even though it's not an inside week on the charts. What we do know though is that you're trading inside the prior week's range, right? So you can see all of this here, right? This past week, the prior week, the week before that, you're still trading inside of this bar. So that bar there, right? You can call this the mother bar of these subsequent 3 bars. So all this trading is happening inside of this bar. So for the most part, it's inside bar trading. Probably going to remain that way until April. All right, so let's take a look at Dow now. Now Dow definitely the outperformer out of all the out of all those indices. Up, what did I say, 7%? Yeah, 6.84%. Looks like, we've had 1, 2, 3, 4, 5 consecutive higher highs now on the monthly chart. And for Dow, nothing much to add here. Although this is what I talked about last week, excuse me, is that you had to watch out because you're going into the Bollinger Bands. It's not a Bollinger Band walk yet, though, so it wasn't an extended move, so you had to watch out for a large reversal. But certainly it was possible that you're going to get a reversal because you're going into highs. It has to keep going at that point, otherwise you're going to get a pullback. The reason why these things don't pull back as strong as, let's say, like a Viacom or a Disca is because you're not doing an extended Bollinger Band walk, right? So it's not as extended. This is simply a tap of the Bollinger Bands. You get profit taking, some short selling, but they repaired the charts on later in the week, and it pops back up and closes green. Here's the issue once again, is that you're going right back into Bollinger Band highs. So this thing has to keep going once again, right? So this coming week, what does price do? It just has to keep going. If it doesn't, you're going to pop back in and back lower again, or trade sideways to consolidate through time. There's your Dow chart. There's your reversal on Thursday, like we saw on the on the SPY and the Qs. That turns the week red, green month, green quarter. Dow looking like we're going to get back those all-time highs. If it can somehow, like I said previously, if it can somehow stay above that weekly Bollinger Band and keep moving. Okay, so on the 4-hour chart, watching this guy, we got the outside bar to close the week. So does it go Momo up to start Monday? That's what we want to wait and see. How does it transact in relation to that 4-hour chart there? Momo up, Momo down, or some sort of Momo inside pattern for the Dow. Russell, let's go to our next index here. And Russell, red month so far. So for the month of March, it is a red month, but we're still up 1%. So not a negative month, but still red. We do have a higher high. This is, I think it's 6 or 7. 6 consecutive higher highs now on the Russell. 1, 2, 3, 4, 5, 6 consecutive higher highs. Top of that broadening formation. Watch out for that. On the weekly chart, though, we do get that weekly reversal, right? So we did break below last week's lows. So it's a little iffy here because you're wondering, okay, how far down can it take it? So this past week here, they repaired it. They come back into the range again, unable to take out the first week's lows. So once again, you're kind of trading inside of this little range. Choppy stuff there, not easy stuff to trade on if you're trading just the Russell. Now, there were some good short opportunities on the Russell this past week. So we did get that inside day and down. That caused a 3-day sell-off, 1, 2, 3, until Thursday where it gapped down. The sellers could not hold it down because look at that Bollinger Band. Once again, this is why you watch these Bollinger Bands. It comes down here. It has to keep going. They don't. They pop it back up. As soon as that happens, it comes back into here. It's go time for the buyers. I personally got long Russell in the form of a TNA, which is a leveraged ETF. Bought that guy there, sold it off on Friday, still holding a bit to see if we can climb even higher on the Russell here. So Russell, repaired this damage for the most part. Let's see where we go from here. I think we can perhaps gap fill this here if we can head a little higher. We do have that monthly open right there, so that's kind of a bit of resistance now. So a little tricky going into the fresh trading week. Okay. So let's do one more index. That's the TSX. Then we'll talk about some of the other assets. TSX still making higher highs here. I think it's 6 as well. 1, 2, 3, 4, 5, 6. Yeah, 1, 2, 3. Actually, 5 months of higher highs on the Russell. The TSX, very energy heavy. So for now, even though oil kind of pulled back a bit, it came back in this past week. Did a reversal. But they closed the week with a fairly strong candle. It's kind of a bullish hammer there. So we get the weekly reversal that clears out some of the longs that we're chasing, and now can it rally higher on the back of those broken longs? If they do, people are gonna have to jump back into the trade again, and perhaps we get those higher highs, all-time highs on the TSX. All right. So Thursday, just like the other indices in the U.S., we did get that reversal signal right there. Green month, green quarter. The thing we have is a red week. Okay, so big reversal here on Thursday, and then we have the follow through on Friday. So let's talk about emerging markets now. This is one that I've been watching for a while, and looks like it is definitely being driven by a number of fundamental factors, especially out of China, where it looks like they're having some a bit of an equities correction in their markets. We did get the reversal on the monthly chart. They did defend it though, right? So here, that they tag that red line. What's that red line? Yes, it's the 3-month chart. 3-month chart was the prior quarter's high. They tagged it, retested it, and now it looks like we're reversing off of it and heading higher. And this past week, it was a pretty solid tag off that level. And guess what that is? There's your red level. That's your red line. That's your prior quarter's high. Inside bar down on the week, right? tag it, they buy it back right away, and now this coming week they break above that high. It's an inside bar reversal to the upside, possibly, but with the month red, it's still a bit of a resistance in the way there. So maybe again, month of April, maybe Thursday we get a little higher here. If it does, we can head back to the higher highs. If not, if this thing doesn't hold and you break below that low, watch out, because that low, if it's if you're long, and if you're long ADRs and Chinese names, you do not want to see this low get taken out. That means the buyers attempted to defend. If they take out that low now, it means the defense has failed. We can sink lower, so watch out for that level. Bonds, last week's video was all eyes on bonds, and certainly this week it's paid to pay attention to bonds once again, because for the most part the bonds, even though we have a really big red month, looks like we're down 13%, which is pretty significant for the bond world. Sorry, this is the quarter, 13% down on the quarter. That's pretty significant on the bond world. We did take out those major levels that we talked about already, right? I was expecting this level to get taken out, the low of 135.48, sorry, 134.45. Yes, right there, 134.45. We took that out earlier, last week, not this past week, but this week before that, and buyer stepped in. Right, we went a little too far, too fast, and that causes the dip buyers to step in, and they got a little too extended, and they popped it back up. So as I was saying on the TLT chart and the weekly chart, look, this is the same Bollinger Band walk that we've seen on many charts now. Once you break above there, you have to watch out. Right, because if you break above there, you're going to cause some short covering. We got a little bit of short covering this past week, not a lot because it couldn't get any follow through. We still have the red month, red quarter. Probably not going to be able to repair that in a few trading days. So so long as this low doesn't get taken out this week here, this past week's low, if that doesn't get taken out, you can expect you can expect this to keep going up. So watch for this week's low. Does it stick or not? Right? Does this week's low stick? If not, watch out. You're heading back down again on the bonds, as we saw. If prices head down on the bonds, that has not been good for a lot of equity names, especially the tech sector. So here's an interesting one thing to watch here. So we've been focusing ourselves on the long bond. So that's TLT, which tracks the 20 and 30 year treasuries. But IEF is also going to watch. That's the shorter term bond. That's the 7 to 10 year chart. We got the same sort of reversal this past week. We had a higher high, but it popped back down again into the prior week's range. Another way to look at the IEF is to just focus on the yields. So instead of looking at the IEF or TLT, another way of looking at the yield would be to look at the US 10-year note, the 10-year yield. So if you go US 10 Y, that's the 10-year yield, and as you can see, that is trending now to the upside on the 10-year. So the 10-year yield is hovering up and up, right? And we got an inside week this past week. So how do we break this inside week? That's what you want to be watching for on the yield. I'm going to change that. I'm going to change that color of that particular line there. I want to make this one. It's a weekly level, so we're going to turn that into a purple line. There we go. And let's do that also for the lower level. So how do we break this past week's range to the upside or the downside? I think it's very possible that we get up to the 197 or 1972 area, maybe even up to the 2% range. Because if you look at the quarterly chart on the 10-year yield, what do we have playing out here? Inside bar down, right? So that's an inside bar down move. Inside bar down reversal. So there's your reversal on the 10-year yield. Now we're going after that pivot high and that pivot high. There's your 1972. I'm going to change this color just because it's just to indicate that it's a quarterly level. So there's our quarterly level, 1972. I'm saying 2 just because it's a nice round number. Will not be surprised to see this thing continue to work its way back up again till we get the 2% yield. That 2% yield again is strong for the US dollar, and conversely would be weak for gold. So gold continues to struggle here, and this is one reason why that 10-year yield is heading up, and on the higher time frame charts really looks like it wants to take out that pivot and then that pivot. So if you look at the US 30-year yield, easy for me to say, oh, I gotta type it in right, US 30-year yield. Same sort of pattern playing out. You see that? It already took it out. So the 30-year yield took out that pivot high right there, those two pivot highs. Now looking at the 10-year yield, looking to do the same thing there. So let's continue to watch how these yields play out in the form of watching the underlying TLT or IEF or the shorter term bond or the actual yields themselves. If you as a proc, you can use the US 30Y or the US 10Y as a chart to watch that. All right, so let's talk about gold, because as I said, gold will be stuck in the mud or perhaps even sink lower if we continue to see yields head upwards, and that's what we've been seeing now with gold. Gold trades inversely with these yields, right? As the US dollar heads stronger, we did see the MGC create that inside quarter and down pattern on the quarterly chart. Monthly chart now, look at that doji. So we did fight back, we did come off those lows, but we're trading back inside of February's range. This past week, as I was saying, I was expecting this thing to maybe break and continue. It did get a short-term bounce here, right? So look, we did break above, 2 weeks ago I said watch out here. If you break above there, that will extinguish that Bollinger Band walk, or extinguish that walk. It did that the week prior. This week I was waiting to see if we could take out this week's range, and it didn't. This is why we watch the ranges, for this exact reason. This is an inside week because we cannot take out the prior week's range, and that makes it very tricky, choppy trading. So I was expecting this thing to break this past week, because on last week's video we had the double outside and then the inside. I was expecting some sort of move on Monday, but all we got was an outside bar. So it makes it for very tricky trading, because look at this tight action. All this stuff, 1, 2, 3, 4, 5 days, right? Obviously this week, all trades inside of this bar's range. That's how tight it is. This is an inside week. That's very tight, choppy trading with mixed time frames. You got the red quarter, you got the red week, but you got a green month at most, at various times throughout the week. So very, very tricky trading there on gold. This is what makes this week more important than ever, because now it's consolidating. This thing will eventually break. So which way is it going to break? Well, if the yields head up, right? If we keep seeing that US 10-year head upwards, guess what? Gold will likely break to the downside, inside week and down. As you know already, I'm long a bit of gold myself here. I took some off because I don't want to be I don't want to have a full position on in case I get stopped out here, because I didn't like this week's trading. But if it somehow does break back to the upside again on this past week, I will get back into that position again on bigger size. But for now, my line stands that low right there. If that thing gets taken out, I have no interest in being long MGC or any other gold product at that point, because the gold miners and the silver names got beaten up this week, and who knows, maybe those guys are more sensitive to it, and maybe it's they're kind of leading the way. But right now, the underlying gold miners, silver miners, not looking so good. So this can change very quickly, but that's what I'd be looking for in terms of the gold charts. Two more names. Actually, let's go one last name. Let's go to BTC now. Maybe I'll show the shit perp chart as well. But here's Bitcoin. So Bitcoin on the higher time frame, what can you say? It's just going to probably be a green month unless something catastrophic happens for the month of March. But more than likely, we'll end the month up. It's already up 23%. So at this point here, it's going to be hard to change this month to a red month, and even harder to create a reversal signal in the month of March. April will be very significant, right? April, as I said before, when you get that new month, new quarter, it is the best opportunity for either buyers or sellers to take control of the charts. If the buyers step up and really, buy into BTC, then that creates a very, very strong opening for the month and quarter, and then it's hard for the sellers to wrest control. However, if the sellers can wrest control and break things below that monthly, weekly time frame open, then you got full time frame alignment to the downside, and you have to watch out there. My prognostication, this is just an opinion here, and ultimately it doesn't matter what my opinion is. I let the charts dictate what my trading will do. But I'm thinking that we probably have one more good quarter for Bitcoin, and then you really have to watch out in Q3 for a possibility of a reversal that will break the quarterly uptrend. But for now, quarterly uptrend, again, still quite strong. All right, so here's the 3-month chart going into highs. With this next quarter, see this coming quarter, let's say you open up somewhere in here. The only way to break down the chart is to take out this past quarter's lows. it was up 92%, right, for the quarter. So it's gonna be very hard. Let's say we open up wherever, right around here, where we're trading at now, around the 58,000 area. You'd have to come back through and break below 28,540, right, for that reversal on the quarterly chart. Very hard to do. So an easier thing for the bears to do would be is somehow you get a smaller quarter for Q3. So you have a smaller bar in Q3, and then somehow in Q4 it does a reversal of the smaller bar, and then perhaps things come back in again. But right now, if you open up here, in April, very difficult for this thing to break back down and take out this past quarter's lows. So for now, I think Bitcoin, even though the volatility it's kind of muted and it makes people nervous, I think for the most part you still have to be biased to the upside. On the weekly chart, yes, this is what I want to point out here now. We have an inside bar reversal setting up. Hasn't triggered yet. We still have a day and a half of trading left for Bitcoin, but we did get that reversal to the downside. So went inside bar down. All right, so it did take out that low, and look, I tagged that 8 period EMEA basically to the T. Buyer stepped up there and broken back into this range now of the prior week's trading. So you have an inside bar down. If you break back above there, right, inside bar reversal, back up, and we're going to get back on the highs once again very, very quickly. Very bullish condition here, especially if we can take out this week's highs. And again, you have full time frame alignment. No reason to be shorting Bitcoin at this point here now. If you really wanted a bottom pick, you could have done this. I'm not interested in bottom picking. I'm already long on my Bitcoin allocation. So Momo down, then Thursday you have that Momo down reversal, up move, and again, here's going to be your Monday bar right around here where that opens up, and it makes sense for that pivot to get taken out. If you get that inside bar reversal, that'll take out that pivot there, and who knows, we can maybe get some fresh highs on Bitcoin. But trading's been kind of tight. Look at the 2-day chart. Hasn't been going very far. Hasn't been going very far, very fast. Just kind of going sideways for the most part. When I say sideways, it's very, very self-evident, because usually when I say trade sideways, it means the bars are overlapping, right? So that means the bars are overlapping one another. We're trading inside the prior bars ranges. When you have directional movements, it looks more like this. We have very little overlap, and the bars are the bars are not overlapping. You have price breaking above and staying above, or breaking below and staying below the prior bars ranges. But for now, we're getting kind of overlap trading, where the bars are literally overlapping one another since mid-March, right? So overlapping bars that have continued all the way until the present. So that's what I'm looking at for BTC, possibly even inside bar reversal long. I might add it once again when we break that weekly chart, but still long a lot of other coins as well. Let's take a look at the one final index. That's that shit perp ETF index, not a ETF, but shit perp index futures contract. And this one here is just trading Momo. All right, so this one here, 3-month chart. That's a ridiculous chart, but it is what it is. Up 400% for the for Q1, excuse me. And yeah, that thing's going gangbusters. So there we go. The issue here now is on this weekly chart, you do have this thing going into the Bollinger Band highs. It is doing the Bollinger Band walk. What we do, as you've been saying already, you just follow the price. How far does Bollinger Band walk take us? You have to watch out if this low gets taken out. So pretty muted week for this index, only up 3%, right? Before that it was up 13. Before that it was up 46. So sort of muted week, a bit of again overlapping kind of trading. So sort of consolidation there. Let's see how it breaks for the coming week and how far this Bollinger Band walk takes things. Interesting pattern setting up here. Double outside bar, inside bar now. So with 4 hours left on this bar, let's see how this thing breaks. And does it go to all-time highs once again on the shit perp index? Well, that takes us to this to the end of this week's video. Once again, happy to put out this this trading video. Hope you get a lot of value out of it. If you have any questions, drop me a line on YouTube or head over to the blog, thetradingedge.org. I'm going to start posting more over the blog now. I took a bit of a hiatus from that, as well as the COVID during the COVID thing. I've kind of been putting out less content, focusing more on my process and my trading. But spring's in the air. Feels like we're turning a page here with the pandemic. So hope to be a bit more vocal, both on YouTube and on the blog. So if you have any questions or comments, again, head over there. or to the comment section. If you like the videos, make sure you hit on the subscribe button, click on the like button, let me know you like them, and I'm happy to put out more content as we get into the spring. So hope your trading is going well. If you have anything you want to reach to know, reach out to me through those channels, and we'll talk very soon. Happy trading, have a good trading week, and welcome to April, to Q2 this coming week. Cheers.